And thank you very much for being here with me. Appreciate it. So a number of China stories to go through today. And the first thing I wanted to talk to you about is this. China has been beefing up its national security, but it seems like it's stuck between a rock and a hard place when it comes to controlling its data and growing its sluggish economy. And sometimes these two things are mutually exclusive. You cannot have both at the same time. Now, U.S. Ambassador to China, Nicholas Burns, says China seems to be sending contradictory messages, that they are open for business and wanting foreign investment, but at the same time, they're cracking down on U.S. companies. Offices have been raided. Employees could be accused of spying for doing checks on potential investors. And of course, this comes amid China's slowing economy and worsening relations between China and the U.S. But what do you think? Is China stuck between a rock and a hard place? Send a message down below in the comments. I do read them for every episode, so feel free to let me know. Meanwhile, airport flight boards will soon have more trips to and from the U.S. and China. This as U.S. regulators boost the number of allowed passenger flights. The U.S. Department of Transportation announced that starting March 31st, Chinese carriers will be able to fly 50 weekly round trips from the U.S. Currently, the number is 35, and the increase comes as the busy summer travel season nears, but it is just a fraction of the 150 weekly round trips that were scheduled before the pandemic. The U.S. has been slowly increasing the number of flights allowed since both countries drastically slashed flights out of fear of spreading the coronavirus previously. But besides that, we also have huge news coming out of China's real estate sector. Chinese developer Country Garden said today a liquidation petition has been filed against the embattled developer. This is for a non-payment of a loan worth $205 million. And of course, this is adding to the woes for China's liquidity crisis-hit property sector. And here's the information you should know about that.
China's property crisis has taken another turn for the worse. Giant developer Country Garden is the latest to face a liquidation petition. The firm revealed the news Wednesday. It said the petition was filed by creditors over non-payment of a loan worth $205 million. Country Garden says it will resolutely oppose the move, with a court date set for May 17th. But the petition will revive concern among homebuyers and investors over the country's ailing property sector. It comes just a month after bigger rival Evergrande was ordered to liquidate by a Hong Kong court. A string of other developers have also defaulted on their debt payments. The sector has lurched from one crisis to another since 2021, when regulators cracked down on the massive debts being piled up at property firms. Now it's all a growing headache for Beijing, with real estate accounting for around a quarter of China's economy. Country Garden says it will continue to work with creditors on a restructuring plan. In October, it missed a $15 million debt payment, prompting groups of bondholders to start organising action against the firm. One investor told Reuters the company had messed around and wasted time ever since, and said it was no surprise if some creditors had now run out of patience.
Now on to markets. As corporate earnings season winds down, investors refocused on economic data and the likely path of U.S. rates. Here's a quick recap of markets.
U.S. stocks closed mixed and somewhat muted on Tuesday, ahead of inflation and other economic data that could shed light on the possible timing of a Federal Reserve interest rate cut. The Dow dipped 0.25%, while the S&P 500 added almost 0.2%, and the Nasdaq climbed nearly 0.4%. While artificial intelligence-related stocks sent the S&P to new highs last week, this week's spotlight is on Thursday's January Personal Consumption Expenditures Price Index, or PCE, the Fed's preferred inflation gauge. Kevin Mon is president and chief investment officer at Hennion & Walsh Asset Management.
If that report comes in hot, as we saw with both CPI and PPI, you could see the market sell off a little bit. The market has certainly got ahead of itself this year, already pricing in a perfect execution of a soft landing with the belief that interest rate cuts are coming. If those interest rate cuts don't come until later in the third quarter or the fourth quarter of this year, you could actually see the market give back some of its gain. So don't assume that these short-term bouts of volatility are behind us, but better days are indeed ahead once the Fed does start cutting interest rates, provided that inflation continues to moderate.
Stocks gained some late support Tuesday from Apple, which erased earlier declines to close up just shy of 1% after Bloomberg News reported the iPhone maker canceled work on its electric car, shifting some employees to its artificial intelligence project. But United Health dropped just before the closing bell to end down more than 2%, as the biggest drag on the Dow after the Wall Street Journal reported the U.S. Department of Justice has launched an antitrust investigation into the company. And Viking Therapeutics surged 121% after its experimental drug to treat obesity helped patients achieve significant weight loss in a mid-stage study. In turn, Amgen, which is also developing a weight loss drug, lost more than 2.5%.
Meanwhile, Americans shedding pounds with drugs like Ozempic could be $1 trillion gain for the U.S. economy, according to analysts. Goldman Sachs is making the argument that poor health weighs on an economy, so improving health could boost productivity. The popularity of drugs like Ozempic and Wegovy for weight loss has soared. Ozempic is a type 2 diabetes drug and has not been approved for weight loss by regulators, but it and Wegovy proved to be highly effective at weight loss in clinical trials. Goldman Sachs estimates the drugs could add 0.4% to America's GDP. That would equal $1 trillion output over the next 4 years or so. Prices for drugs have been going up. In January, a 4-week supply of Ozempic was listed at just under $1,000. Meanwhile, San Francisco's police could soon be given the power to use drones and other advanced surveillance technology, as the traditional progressive city is set to vote in March on the controversial measure known as Prop E, proposed by the city's mayor, who says it's needed to fight crime. And this is despite concerns by privacy activists. Here's what you need to know.
Drones could soon be flying in San Francisco under the direct control of the city's police, along with other surveillance technology, if a controversial ballot measure is passed in March by its residents. The Safer San Francisco proposal, also known as Prop E, comes at a time when issues of drugs, homelessness and crime have reached a flashpoint in the traditionally left-leaning city. And Mayor London Breed is betting that disgruntled citizens will vote for the proposal.
Well, I'm excited about drones because when you call 911, you want somebody right there. And drones give us the ability to get there faster than anything else so that we get eyes on the situation.
The measure would not only allow police to use security cameras and drones for video surveillance, it would also involve using facial recognition and AI. And that would mean overturning a 2019 ban in San Francisco on facial recognition surveillance technology by government agencies due to concerns then over privacy and misuse. That ban came amid a progressive drive for criminal justice reform during the Trump administration, including seeking alternatives to jail. But the city swung to a more pro-police stance during the pandemic. Speaking to Reuters, Mayor Breed played down any anxiety.
So I get that people are concerned about privacy rights and other things, and technology is all around us. San Francisco is the artificial intelligence capital of the world. I mean, we have the top 8 of the top 20 companies in the world right here in San Francisco. So it's coming whether we want it to or not.
The proposal's success is key for Breed. Elections are coming in November, and her approval ratings have plunged as the city struggles to bounce back from the COVID era. Proponents of the new measures say voters are ready to embrace more policing, with a recent poll showing 61% support. Breed says she is seeking to assure the city that the police will not abuse its authority. But critics have pointed out Prop E includes measures that actually cut police accountability. Matt Cagle, senior staff attorney at the American Civil Liberties Union of Northern California, accused the authorities of drawing from a well-worn playbook.
They're exploiting the legitimate fears that the community has about public safety issues, and they're using it to grab power and hand more unilateral authority to the police department. We think it's a really misguided approach. It's about politics and not public safety.
Privacy activists also argue studies have shown policing technology is often racially biased, invasive, or faulty. And some say they're worried it could lead to unintended consequences for already disadvantaged communities.
And for the first time in months, consumer confidence has slipped as potential recession fears make a surprising return. Research group The Conference Board found that its consumer confidence index dipped in February. The index measures Americans' current outlook of economic conditions and for the next 6 months. Now, the decline came as a surprise because analysts actually expected it to hold steady since the economy showed resilience to higher interest rates and inflation. Now, researchers found that Americans this month were slightly less worried about rising food and gas prices, but on the other hand, were more concerned about job opportunities and the upcoming presidential election. The report said that the index fell below the threshold that often signals a recession ahead. Now, college tuition costs continue to rise, so it's more important than ever now for parents to start saving and planning early for their child's education. One of the most common savings plans is the 529, and there are some new changes to how these accounts work that could make them more appealing. Here's more on that.
When it comes to saving for college, there are 3 types of accounts parents should know about. Savings account. Your child can use the money for anything, and there's no penalty for withdrawals, but the interest you earn may be lower than other options. Custodial account. No withdrawal penalties as long as the funds are used for the child. Returns are taxed at the child's tax rate. The account can't be transferred to someone else. 529 plan. Your money is invested over a period of years. Any return you earn is exempt from federal taxes. If you direct the funds towards educational expenses, your withdrawals are tax-free. Tony Durkin with Fidelity Investment says 529s offer great benefits.
A 529 is a great tax advantage way to save and pay for qualified educational expenses.
New this year, unused money can be rolled over into a Roth IRA.
That was a barrier to entry for some folks to get into 529s because they didn't know what would happen with those unused money.
Here's how that works. The 529 must be held for the designated beneficiary, in this case your child, for at least 15 years. The transfer amount is subject to IRS limits. It's $7,000 in 2024. There's also a $35,000 lifetime cap for each beneficiary. The tax benefits are a big selling feature.
Every state's different, but a lot of states offer a state tax deduction for contributions made to a 529 account.
And when it comes to savings, contribute as much as you can and off it.
And more data is showing that the economy appears to have lost momentum at the start of the year, and this is as orders on U.S. durable goods fell. The Commerce Department's Census Bureau reports orders last month on durable goods, which range from aircrafts to toasters. They plunged more than 6%, and this is the largest drop in 4 years since the first wave of the COVID-19 infection. And the biggest decline was in transportation equipment, which fell by more than 16%. And this slump is part of a larger data revealing an economic slowdown that includes a drop in consumer confidence, retail sales, as well as housing starts and manufacturing production. But at the same time, economists are not really expecting a recession, despite the data. Now, this next piece of news is the first in the entire world, and that is New Zealand is going to repeal a law banning tobacco sales for future generations. This is according to the government, even though researchers and campaigners warned of the risk that people could die as a result. Here's the report.
New Zealand is repealing its law banning tobacco sales for future generations on Tuesday, the government said. That's despite researchers and campaigners warning of the risk that people could die as a result. The anti-tobacco sale rule, which would have been a world first, was passed under former Prime Minister Jacinda Ardern's administration, aimed at preventing thousands of deaths related to smoking a year and meet the country's smoke-free goal. But New Zealand's new coalition government, elected in October, confirmed the repeal will happen on Tuesday as a matter of urgency, enabling it to scrap the law without seeking public comment, in line with previously announced plans. The proposal was originally set to take effect July this year. It would have banned young people who were born after January 1st, 2009 from buying cigarettes for life, making it one of the toughest anti-tobacco rules in the world. The revoke of the plan has been heavily criticized over its likely impact on health outcomes in the country. People are also worried that it could have a greater impact on Maori and Pacifica populations, as those groups have higher smoking rates. An associate health minister said the coalition government was committed to reducing smoking, but was taking a different regulatory approach to discourage the habit and reduce the harm it caused.
And it seems like streaming services are entering a new era, and not a good one, as subscriber growth in the US last year was cut in half. Growth slowed to 10%, according to research data firm Antenna. Netflix, Peacock, and Paramount drove the most growth, with nearly 243 million total subscriptions at the end of the year. Streaming companies have shifted their focus from pumping money into content and subscribers to scaling and managing subscribers. The report from Antenna also revealed that Netflix is losing its dominance in the space. It used to hold half the subscriber count and now accounts for just about a quarter. And it seems like Apple has canceled work on its electric car, and this is according to a source familiar with the matter. This is after a decade of the iPhone maker kicking off the project. Here's the details.
Apple has hit the brakes on its project to create an electric car. A source told Reuters Tuesday it's cancelling the work on the idea altogether. Bloomberg, which also reported the development, said employees working on Apple's EV will shift instead to a unit for AI. Apple declined to comment. The company launched Project Titan, as its car effort was known internally, a decade ago. That was when a wave of interest in self-driving vehicles swept through Silicon Valley. Reuters reported in 2020 that Apple was considering releasing a vehicle as soon as 2024 or 2025. But progress had been uneven even before the COVID-19 pandemic disrupted the global automotive industry. High interest rates have soured consumer sentiment, prompting automakers to cut jobs and production. Even EV market leader Tesla has been paring back its investments. Meanwhile, Apple has so far held back from any big moves in AI, in contrast to tech giants Alphabet and Microsoft, which have first-mover advantage in infusing the breakthrough tech into their products and tools.
Now, burgers and fries at lunchtime could cost more than dinner time or the other way around, and this is as a fast food chain prepares to test surge pricing. Burger chain Wendys plans to have prices on its menu fluctuate throughout the day based on demand. And this is a strategy already used by ride-sharing and ticket sellers. Wendys is investing $20 million to launch digital menu boards at all company-run locations in the U.S. by the end of 2025. And the company will also be trying out AI-enabled menu changes and suggestive selling. Wendys is set to start testing dynamic pricing as early as next year. And Aston Martin's annual losses more than halved in 2023, coming in smaller than market expectations after selling prices reached record levels as the British luxury car maker delivered its Valkyrie models and other special edition cars. Here's more.
Aston Martin's annual losses more than halved last year. The British luxury car maker saw selling prices reach record levels. That as it delivered its Valkyrie models and other special edition cars. The automaker reported an adjusted pre-tax loss of $217.36 million for the year ended December 31st, better than analysts forecast. While shares initially rose on Wednesday, gains were reversed to fall close to 3%. Investors were concerned about the car maker's cash flow and volumes. Aston Martin had hoped to turn free cash flow positive in the fourth quarter of last year, but it was hit by the timing of deliveries of its DB12 and Valor models and now expects positive cash generation in the second half of this year. Aston Martin, which is fictional secret agent James Bond's car brand of choice, has had a tough time since its market debut in 2018. Executive Chairman Lawrence Stroll has tried to boost its cash and margins by rolling out next-generation sports cars. Looking ahead, Aston Martin kept its near and medium-term forecasts unchanged.
Norwegian Cruise Line Holdings forecast a first quarter profit on Tuesday, betting on high ticket prices and steady demand in the U.S. for cruises to the Caribbean and Europe, sending the company's shares up 12% in pre-market trading. Take a look at this.
Norwegian Cruise Line Holdings believe it is sailing into a bright future as it forecast a first quarter profit Tuesday. It's bet on higher ticket prices and steady demand in the US for cruises to the Caribbean and Europe. The company's shares flew up over 12% shortly after the update. Cruise operators have seen record levels of bookings this year. Travellers want to spend on new experiences and have chosen cruises over land-based alternatives like hotels or theme parks. It's given companies like Carnival and Royal Caribbean more room to hike prices on their itineraries to offset high labour and fuel costs. Norwegian's advanced ticket sales ended 2023 at a year-end record of $3.2 billion. That was about 56% higher when compared with the end of 2019 before the global health crisis. It further said it returned to full-year profitability for the first time since 2019. Norwegian Cruise forecast an adjusted profit of 12 cents per share for the first quarter. The company's fourth quarter revenue rose to $1.99 billion from $1.52 billion a year earlier, just above analyst forecasts.
Now, moving on to Japan, and it's not good news. The number of babies born in the country fell for an 8th straight year to a fresh record low in 2023. This is according to preliminary government data. And this is underscoring the daunting task the country faces in trying to stem depopulation. Here's more on the data.
The number of births in Japan fell to a record low in 2023. That's according to preliminary government data on Tuesday. It is the 8th straight year that the number of babies born in the country fell, underscoring the daunting task the country faces in trying to stem population decline. The number of marriages also fell to below 500,000 for the first time in 90 years, foreboding a further decline in the population, as out-of-wedlock births are rare in Japan. Yoshimasa Hayashi is the chief cabinet secretary.
The decline of births is a crisis. The next 6 years up until the 2030s, when the population of young generations is expected to decline rapidly, are the last chance to see if the declining birth rate trend can be reversed. And I believe we are at a time when we have to take urgent measures.
Mindful of the potential social and economic impact and the strains on public finances, Prime Minister Fumio Kishida has called the trend the gravest crisis our country faces. He unveiled a range of steps to support childbearing households late last year.
It's becoming harder and harder for grandparents to help with childcare. I think from the very beginning, the social environment makes it hard for women to have a lot of children and continue to work.
I think Japan is already well past the time limit for solving its declining population. My feeling is that if we don't change direction and put in place systems that welcome workers from overseas, it won't be enough to solve the problem.
According to estimates by the National Institute of Population and Social Security Research, Japan's population will likely decline by about 30% by 2070. With 4 out of every 10 people aged 65 or older.
4 years from now is a startup event at MWC in Barcelona with the mission of supporting the growth of founders of tech startups. It started in 2014 as a very small side event of Mobile World Congress at a separate venue. Now, back then, it hosted 60 small Spanish companies. But 10 years later, over 930 such tech small businesses are participating in the 2024 edition of MWC. NTD's Shar Marshall has more.
4YFN serves as a way of interchanging projects and visions with startups from all over the world. And Barcelona is one of Europe's main hubs for startups. Musicene is a local startup created to help new orchestra conductors develop their skills without the need of an actual musical ensemble. Some of today's music students practice with an orchestra or big band no more than 5 times per year.
Musicene Lab is an immersive learning platform that allows musicians to practice and interact with virtual bands and orchestras. In this case, it's like kind of a simulator of rehearsals.
Organizing a rehearsal with more than 30 musicians for rehearsals can be very costly. Users can interact with the tempo of the music with hand or baton gestures. Right now, internet latency is a limitation when it comes to rehearsing remotely with an orchestra, but CEO Louis Parra says that the evolution of 5G could be the solution for this problem.
So what our first prototype consists on orchestra conducting. So you can put on your headsets, and with the hand tracking of Oculus Quest 2, you can conduct an orchestra in real time.
This year at 4YFN, there are 3 vertical areas and industry sectors that are presumed to be big potential in the future: digital healthcare, green tech, and university spinoffs. The director of 4YFN says that tech startups play an important role.
Yeah, I think startups have become a very important player of the modern economy. I think that we've seen many success cases, and it's super cool to see how a startup event such as 4 Years From Now is today at the center of the biggest Mobile World Congress. We've seen many startups that have justified their value. No? They've been able to become big corporations, they've been able to create market value, and as well in many cases they have been capable of creating progress for society that is very important for 4 Years From Now.
4YFN says Barcelona's municipal government is switched on to startups and offers generous subsidies and grants, while its universities provide a rich pool of potential staff, making the city a spotlight of focus for 4YFN. Sean Marshall, NTD News.
And that's all for today's NTD Business. Thank you for watching, and I'll see you soon.